Hello, everybody. I'm Alpha Magnate, and I'm broadcasting from the cryptoverse. We're going to be looking at some technical analysis, some things like stochastics, candles, moving averages, net volume, Fibonacci, and other tools of the trade when you do chart analysis. I also want to talk a little bit about fundamental analysis, and that's what's basically in the news and what people are saying. What are the whales saying? What's being said generally all around YouTube? This is my first broadcast doing this, and so we'll progress. But if you are interested in these things, then click the like, follow, and subscribe. What I want to do is look at my charts. I see if a viewer out there. Hello. Please post any questions that you may have in the comments. I will see them and respond. So I'm going to share my screen with you. And what we're going to look at is some analysis that I've done on Bitcoin because the fundamental analysis shows overwhelmingly that Bitcoin still is the whale and it affects all other cryptocurrencies in the market. Okay. So we have to look at Bitcoin and what it is doing if it's going to go up or down. And that's the big question, right? It has a 50-50 shot. But this is chart analysis and all the rainbow stuff and some this triangulation is analysis that I've been doing on the movement of Bitcoin to see what is it doing. And if I click somewhere on this map, uh, this shows me this is from October of 2020. This is the level that it was at. Okay, and then I'm using some Fibonacci retracement tools to generate these numbers, which create zones. So the rainbow areas are different zones of support and resistance. And these are mapped out by these numbers that you can see here. This is a 50% retracement from the top. This is less than that and 0.236. And then on the other side, we have 0.618, 0.786, and then all the way down here. Now, you can see where we're at the top here. This was 64,000, and this was not that long ago. This was uh, on April 14th, and today is June 2nd. So not that long ago, right? 6 weeks approximately. So here, so as we move through here, we had this dip, and then it dips down to about 49, and it's testing this point of resistance here, which is common. This is the way that Fibonacci retracement works. Commonly, it tests a high, and then it will fall down through these channels, and usually test the 50% retracement level, which is here. And then it will climb back up. And when you draw Fibonacci channels and retracement, you draw it from the either from the low to the high or the high to the low to create these different channels. And you can draw them on different charts. So this is an 8-hour chart. We can see what this looks like on a 4-hour chart, a 1-hour chart, the minute chart, a daily, and a weekly. And uh, when we're looking at the candles, I like to look at the candles generally and see how they're lining up with these different resistance charts. And as you draw them in different sections over the days and the weeks, you'll see that some of the lines line up with the ones that you drew the previous support and resistance. And so this is where we're at right now. We tested here at 60. It drops down to about here, about 40,000. And then we had the big plummet on the, what was that, the 17th of May, I believe that was the date. And let me see if we can go into a different. We're going to look at the 4-hour time chart. Now, I drew this triangle here to see how it's consolidating. You could see it's bouncing. I drew a point here at A, B, C, and D. And then the rest of it is drawn out for me. So this purple triangle is showing a consolidation in the price action. And what happens typically is that this is where there's not a lot of volatility. There are a lot of opinions on whether it's going to go up or whether it's going to go down. But everybody's kind of watching and waiting for somebody to make a move. And I heard it said that we're all the minnows, we're all the smaller fish that swim around the whales. The whales are the ones that really move the market. Well, Kathy Woods and Michael Saylor are two pretty big whales. And they both believe that this consolidation period is the energy gathering up. And then typically at the end of this triangle, and it usually busts out of here. It doesn't typically make it all the way to the end. But you could see it's testing the highs, and then it comes down. And look at how it's lining up and testing these levels right in the triangle. I mean, and I drew this. Keep this in mind. I finished this at letter D. So it came down, and then if you look through the triangle, you could see some of the Fibonacci retracement, that square, this pink square, it bounces off of here, touches it right there at 37, goes back up, but it doesn't go up to the previous high, creates a slightly lower high. Then it drops back down and it tests this retracement right here, which is, what is this? 3, 6, 12. So 35, right around there. This level, not quite half. It's still looking what it wants to do, and it's consolidating. So then it tests here at 33, goes back up, and it's moving in this channel. And what this information, what the stochastics are showing us is, I generally look at this to see, what's going to happen as far as the prediction of the stochastics, which is if the blue line goes over the red line, it's typically the bulls, and they're pushing this up. And when they cross, like right here, and the blue drops below, the bears are in control, and they're going to push it down. As you can see, the candles responding, crosses back over here, pushes up. This is also reflecting volume on the MACD. You could see these little lines here. Some volume comes in and pushes this back up. And so the question is, who's in control right now? Well, let's go down to a 1-hour chart. And I got to say, the more that I listen to, and we can watch some videos. I know that YouTube blocks all the videos, but I'm curious if I show it to you, some videos on my phone, and we listen to them, if we would get blocked. But I've consumed lots of hours, probably 10 hours of YouTube videos, watching people talk about, everybody's opinion. And that's the fundamental analysis of it, is people's opinions, what's being said. And there's a really cool channel that I found about this, and this is Lunar Crush. Now, if you're not familiar with Lunar Crush, I'd recommend checking it out, because what I think is really cool about it, they use AI and artificial intelligence to basically scan YouTube and other social media channels to determine what they're saying about fundamental analysis, and they chart it. So you can see here they have influencers, and then you can scroll down and see who they're naming as the influencers, and then you could see basically uh, what coins are mentioned frequently, how many engagements, how many posts, how many likes, how many people are following this. Um, and this is just Coin Telegram. If we switch over here, this will show us uh, this Bitcoin. Here's Altcoin Daily. Let's see what they're saying. Oops. But anyway, check this out on your own. I don't want to get it too much into this, but it's a pretty cool way to look at, again, like what are influencers saying out there in the world. But back to the chart analysis, this is really curious to me, and some people are thinking that this might not really have a strong breakout out of this consolidation, but typically it does. Now, my prediction is this. You can see how far it's moving down this channel. And as it consolidates and it gets narrow and narrower, the energy compresses more and more, meaning that it usually explodes in one way or the other. It will explode out of this triangle, either up or down. And my prediction is that it will move not like we've seen it. I don't think it's going to go up to 60,000, but I'll tell you, I was bearish, going into the weekend, and everybody that was watching Bitcoin and watching these markets through the weekend uh, thought that I think there was a lot of bearish sentiment, and I gotta say that I think that some of the influencers that are the whale influencers, the ones that or like lead hedge funds and stuff. I think they had time to talk to their constituents. I think Kathy Woods, Michael Saylor, they're out there, they're doing media, they're doing interviews with people on YouTube, the influencers on YouTube, and they are trying to change the sentiment. And that's what's happening. This is all a conversation. So this triangle right here, we saw downward momentum. And this downward momentum started at 60 and it was going down. And this was a sharp drop right here from 55. It plummets down to 40. It moves in this channel, in this yellow green channel, since I have a couple different channels in here. But you could see it moves here. Then once it breaks this barrier at 48, it drops down into this larger blue channel. And it kind of just cruises right through it. It tests these levels here at about 35, and then it comes down and it tests 30. And I guess a lot of these institutional investors that put their money in, they want it to go up, right? They don't want to look bad to everybody that they're managing their money. So they're doing, and that's where this triangle is happening, because I think a lot of the retail investors believe that what's going to happen is what happened. I'm going to jump out to the weekly chart here so that you can see. Uh, I think, and myself included, um, this level, okay, right here, this is way back at 20,000. And I'm pretty sure, usually the way that charts move when they have an explosive growth like this, they'll come back, they'll test this 50% range again, which is right around 33, right? It went up to 64. So you're talking about 32. Now we've tested it. And the question is it going to go down into the lower half and bounce around through these channels as it works its way? How's it going to move? Is it going to work? But is it going to move predominantly down or predominantly up? And that conversation is happening right now at this 50% point. And this is pretty important. But what we typically see in chart analysis is that generally, if it really goes on a big upsurge, it will come down. And if you look at the top of the last really big upsurge, which is way back here in 2017, this was the 4 years ago, this was the last halving of Bitcoin. For those of you know about Bitcoin, they half the amount that can be produced every 4 years, which creates a supply and demand surge. And we're now dealing with the repercussions of that. And that's why, I was wondering, is like, what caused all this buying trajectory up for it to skyrocket? I mean, it was hanging here. This was the prior high. It couldn't break through $20,000 a coin in 2017. And it whittled its way back down here, created a lower high here around 11,000. So it was testing around this 10, 11,000 mark to find a new bottom. And it hung out here. It sunk a little lower down around 8.4, and it eventually went all the way down to $3,500 a coin. And that was in 2019. So 2 years later. So the question is this going to be a bigger version of this surge? And is it eventually going to whittle its way down, and probably not down to, $3,500 a coin, but where is it going to find a new support level? Generally, it happens right here. And this top of this blue channel. I don't think Bitcoin personally, because of all the institutional investment money that came into it this round, this is new. This is the first time that this much institutional investment, big banks. Now, everybody's saying it, and Kathy Woods and Michael Saylor, they really kind of come from that world. They and represent that world, and that world's view is they're recognized that Bitcoin is now in the $1 billion club. Their market cap, their evaluation is $1 billion. They have that much volume being traded in it, and they need to pay attention to it. So the big whales, the super big whales, the big banks, they bought Bitcoin as a store of value. What that means is they bought it now, and they bought it, around this 40K range. So they're anticipating that more other banks will follow suit, and it will continue to push this up. And they look at this as a long-term asset. This is a 10-year hold minimum for them. Okay. They're institutions, they're not people. So they're not worried about, flipping a few dollars and making a few $100 here or a few $1,000 here and there. And the people, from a retail perspective, if you were holding it or hodling it, as it said in the Bitcoin community down here, even if you bought it high, right? You bought it at 20,000, when it hit 60,000, you 300 times your investment. So whatever you had in it, you made that money. And I was one of them. So I bought Bitcoin back here, and well, actually, I started. I bought some of it here, and then I bought again in the 2019 kind of push up. Started looking at it, but really, I bought most of my position here, and with the idea that I wasn't going to look at this for 3 to 5 years, and I was correct, because I figured 4 years would be the halving, and it would push up between year 4 and 5. But what happened actually a little sooner than I had anticipated, because it happened right at the beginning of 2021, um, and it just skyrocketed, as you could see. But where's it gonna fall back down to? Because as retail investors, we need to buy it low. To buy low, sell high. Everybody knows this is the way the game works, and this is speculation. Everybody is trying to make money here, but here's what I believe is going to happen after watching so many videos from all the YouTube influencers to the larger institutional investors, is that Bitcoin is something to hold on to, and that it will become a new store of value, and that it will continue to influence all the other cryptocurrencies in the market um, for at least the next 4 years. And it will become I think in about 4 years, it's going to become a long-term store of value, meaning people will kind of measure it like gold because there's only so much of it, and it is so, it's legendary in this world now, that this cryptoverse. It has such it's a legacy coin, and it works very well at what it does. It's very simple. The way that it works, as a store of value, and that's what it's meant to be. It's not meant to be traded. It's meant to be taken and appreciated as something that won't depreciate over time. And every 4 years, if you bought this and held it for 4 years, you didn't lose money. So but that's the idea. When you buy Bitcoin, you really need to buy it at a good whatever price you can afford to get in, and just know that it will appreciate in 4 years. But you don't wanna get nervous and, as they say, have paper hands or cabbage hands or lettuce hands or soft hands and drop it and get rid of it. You wanna hold on to it, and when you hear diamond hands, that's what they're talking about, because, this is a value that these big players believe that Bitcoin will not only see 100,000, but it will see 200, 300, 400, and $500,000 a coin. That is what they are predicting, and they believe that that will happen in the next 10 years. So when you buy it at $35,000 a coin, obviously you don't need to buy a whole coin of it. You can buy any percentage you want. And at this point, let's check out some of my buy orders and some of my sell orders on Bitcoin. Okay. So here's what I'm doing. I initially was thinking that it would drop down and find that low. It would test this old top, what used to be the top at 20,000, and it will test this. It'll see if it can break through. And it won't break through. And I thought it would bounce off at the 20. And then I thought it would have some type of meteoric value climb again. Um, pardon me. What I think is more than likely going to happen is it's going to trade around. It's going to find a new channel in which it can kind of ping pong back and forth, up and down for the next couple years. And I think that uh, a lot of people are speculating that a lot of the big whales are saying it's going to go to 100,000 this year. Um, well, why are they saying that? Because they bought it. They bought it at 35, 40, 50, 60,000. If you bought it at the top, you certainly want it to go higher as soon as possible so that you could sell some of it off and keep some of it, right? So you want to make your money back. You want to double your money, minimum double your money. And I think most investors look to triple or quadruple their money before they take anything off the table. And this is what I see. And I think this is why this run up happened the way that it did, because people that had it at 20, they didn't want to sell it till they held it for so damn long, for years, right? So they're like, I'm not selling this until I get at least 3 times my money. And it doesn't matter if you had $100 in there or $1,000 of Bitcoin. I had $6,000 worth of Bitcoin, and it turned into $32,000. And it wasn't just Bitcoin. I had Ethereum and Litecoin as well. And obviously those didn't appreciate as much. But Ethereum did. It did pretty good. Then I pulled all my money out of those assets and I diversified, meaning I moved all that money into different places on the board. So, and the board being the cryptoverse. So I invested in. I could show you my wallet if you guys care to see. But this is where it went, and I'm trading on 2 different exchanges. So this is what I have in this exchange, 14,000 currently, and this went down by about half. I mean, this is a lot lower because I did buy a lot of this around like 50, and then I sold some of it on the bounce and was able to recoup. So I didn't have quite 28,000 in here, but I probably had about 20. And I expect that these will appreciate again. And I'm not selling a lot of this, but this tether is what you kind of move everything into, and this is where I'm setting up all my buy offers at lower points, expecting the drop. I took a real hurting on Chainlink. I took a real hurting on Internet Computer. I think these things, Internet Computer is just not going to see the, it's not, it's too early. When I invested in it was too early. I bought this at over $3 a token, and what's it at right now? It's like well, it's up to $2 a token, so that's pretty good. But is that what it is? Let's take a quick look. Make sure I'm right. It'll show right here once it loads. Oh, yeah, I'm sorry. Internet Computer, I bought at $300, like $320 per token, and it's down to 105. So, and I lost 2/3 of my money, and you can see all these tokens. If I stretch this out, you're going to see similar movements in the way these all follow Bitcoin. Now, this one is unique because this just launched a couple months ago. Wait, hold on. This doesn't even have a history back here past a few months. But it was affected by Bitcoin as well. And here's another triangulation pattern. This one broke out to the downside, unfortunately, and took us way down here. But let's go back, and I just want to kind of document this. So this is where I took all my Bitcoin out, and now after watching these institutional investors. I mean, I'm not saying I'm getting FOMO'd back in, but they do make a compelling argument that the institutional investors bought in. Other banks will FOMO. They will FOMO in when they see like Wells Fargo and all these other, Bank of America and all these other big credit card companies and buying in. They're going to FOMO and they're going to be like, we need some of that in our portfolio as well. Well, all my portfolio went down to these coins, and this is the holdings that I have. The top ones: Internet Computer, Cody, Polkadot. Um, and the reason you don't see Cardano in here is because Cardano was at the top of everything on here for me, but I pulled out. I have 1,000 Cardano, and I pulled them all out into a staking, into Daedalus, which is um, Cardano's staking pool system that they have set up. So that was just a long term. That was something I'm like, you know what? I'm not trying to trade this. I might buy some more of it, but what I have, I'm just letting it ride because um, Cardano is going to come into itself over the next probably throughout this year, and I think it's going to decouple itself from Bitcoin the most, meaning that um, it will become less and less influenced by whatever Bitcoin's doing over time. In fact, I think most of these cryptocurrencies, because I mean, and by cryptocurrencies, I mean these tech companies, because these are all tech companies that are just really the companies that are going to be the next round of companies that operate on what is like the Internet of Things, and also in that realm, and also like Internet 3.0, which is moving from centralization to a decentralized business model, which is awesome. And so there's going to be a lot of opportunities. These companies are looking for ways to help you make money, to help you become a better, you know, basically just like get a cut instead of Facebook like selling all your data. Like they're trying to figure out ways to like use a blockchain so that you, if you want to like watch commercials like Brave, if you download the Brave browser, you can do that right now, and they have their own token. And if you watch the commercials, you can opt into watching commercials. You don't have to watch them, and if you watch them, then you actually get paid to watch them, and they make a little bit of money and you make a little bit of money. So that's pretty cool. Or you can opt out to not watch them at all. And this is the way that the decentralized internet is coming about. And so these are a lot of the main players. I'm really big on helium. I'm actually I bought a couple helium miners, which aren't going to get here until like September, unfortunately. But this is a really cool company. If you guys aren't familiar, just check them out. But yeah, so this is what I kind of moved my money into. So, but let's go back, and I'm going to wrap this video up. We're going to look at Bitcoin one more time, and I want to tell you what my speculation is that there is certainly a lot of FUD. There's a lot of fear, uncertainty, and doubt going on right now. And so the technical analysis tells me that the bears are in control. This is a downward trend. Um, but the question is, did it stabilize here? And will this create a new channel? I think that it will. I think this channel is going to be between the 43,000 and down here around this 30,000 range. And I think it will continue to ping pong around here. Now it's consolidating, but and it's going to bounce out of here. So it just got tighter in around this 36. And I think it could pop all the way back up to around to test this $50,000 level per coin on Bitcoin, which again will move all the other currencies. If that happens, if you got trapped in any of those other currencies, there's going to be a selling opportunity for you, because I don't believe that this is going to have a steady trajectory climb all the way to $100,000. I think it might I think it might go up, and then I think it's going to come back down, and I think that we will eventually test 20,000 before we go up to 100,000. Do I think it's going to go below 20,000? I honestly don't think that it will. I really don't. And the reason that I don't is that it was holding at this 20,000. This is back. Well, this isn't that long ago. All right. This is November of 2020. So, I mean, this isn't even a year ago. So let's go back a little further. All right. Let's go back a year. Here we are in May 2020, and the top level that it was holding was 10. So, my technical analysis, as I was looking at the past history of the way this moved, I'm thinking it would test 10. But because there's so many institutional investors that got into this when they saw that Bitcoin wasn't a fluke, it wasn't going anywhere, and it was now trading $1 billion worth of assets, and they needed to own some of the Bitcoin as an asset. They all moneyed in right around here. They started buying it, and this is why I think this is the new channel between 30 40, because I think this is where the bulk of the institutional investors came in. In other words, there's new whales that entered the water, okay? And again, this is always going to be a battle of the whales. We just kind of need to, what we're doing with chart and fundamental analysis is really trying to figure out how the whales are going to influence each other. Sometimes they try, they're always trying to fake us out as retail investors along the way so they can get our money into the game as well. So there's a lot of trickery, there's a lot of deceit going around, and it's like a soap opera when you look at the fundamental analysis. But the technical analysis, I mean, it doesn't lie. We can kind of see, we can gain some insights from it, but man, it's still, you never really know. But what I believe is that this last big high that we saw in 2017 will eventually become the new low, and that we're going to trade between this 20 and $40,000 range. And you see this rainbow that's right in here. This is going to become the new low. If it ever dips down in here, I mean, just buy as much as you can if it dips below 20,000. But I do have my buy and sell orders. I'll show you. I have it 35 going all the way down to 25. Actually, you know what? I I pulled yeah, there's a 25. There's a 25 and there's a 24. Okay. So, and I set up my buys, my lower buys, I set everything at $50 or $25. And the reason I do that is because when you buy it and it converts to Bitcoin, it's sometimes hard to figure out, like, if you want to sell it, you know, how much did you buy? So you have to look in your trade history, and then you're like, okay, well, if I'm trying to calculate it in Bitcoin, I don't see these numbers that way. I don't know what this equates, because the Bitcoin, point 0.007 of Bitcoin, what does that mean? It fluctuates so much. So you need to know what your fill price is, what you bought it at. But the best thing to do is to look at, I like to just look like, bam, this is basically, these are $25 buys, 23.64 after, they took their cut for making the trade for me. But I put this in at 25, and then I put this in at 100, and it comes out at 98.91 after Gate takes its little cut to place the trade for me. So, but that's what I do. I put them at 25, 50, and $100 buy-ins. And like this one was, I sold this. You could see, like, I would have bought this at this bounced back up to 40, and I sold it because I bought it. Um, let's see. I didn't buy it that low. Here, I started buying it like 30. Look, it bounced. I bought it when it was down at 30. The last time it was down at 30. So I have a 30, 30, 32, 33, 36, 39. Bought a bunch of 39s, and then it topped out at 40, and I sold 40, 40. I sold it at 40, 42. And then that's what I'm saying. It came back down. I knew it was going to bounce. Why didn't I didn't know, but I thought it was going to I thought we were going to catch a bounce, because usually when you see these big spikes like this and it bounces down, it's testing another resistance level. The bears are going to see how low they can push it, and before the bulls push it up again, and it creates a new high here, and then it drops down and tests this level, and I push it up here, and it drops down this test level. And as we create higher highs and higher lows until this happened, and there's a consolidation period up here around 60. Wasn't long, didn't take long, and once it broke, it just crashed through this, and it didn't stop here. It came down and tested here. It didn't stop here. It came down and tested here, and which is 48. And now it looks like it came down and tested here in 41. It's going to test here at 29 and 30. And we're going to move in this channel for, I think, a little while. There is going to be a consolidation. Is it going to go up high? If it does, you have an opportunity to sell. If it goes down low, I would say it is definitely safe to buy at 30, knowing that if it goes down into the 20s at any time during the next 2 or even 3 years, don't sell it. Just buy more if it ever drops below 30, because what I can tell you, according to all the analysis, is that there'll be another halving in 4 years. So around 2025, you're going to see this will definitely be pushed up to 100. So whatever you buy down here, if you can buy it at 25,000, you sell it 100,000, you're going to forex whatever you put in. So if you put in $1,000, between 20 and 30, when it hits, that 100 kind of range, that's going to be $4,000, that you're going to be able to forex any amount of money that you put in there. It will forex in 4 years. And that's the power of Bitcoin. And that, because there's so many players in here, this is almost guaranteed. And they're always trying to create fear, uncertainty, and doubt to get people to sell out of their positions so that they can buy it up. And that's what happened here. And it made a lot of sense. Think about it. I mean, if you bought it way back here and you were holding it, you were hodling Bitcoin, knowing that we were going to go in the halving, and here we are, it's like 2020, and man, 2021, and then it starts to climb, and you're like, yes, here we go. And you're just holding it, and it just climbs, climbs, climbs. And you bought it at 10 and it went up to 40. What'd I say? That's a 4x investment, right? You made your money back and then you made 3 more times than that. So that's where people exited, but not everybody. It only dropped down to 30 and then it started to climb again and made it all the way up to 58 and then it pulled out down to 40 and then it pushed up again. And then this is kind of choppy, right? It kind of chopped around between 50 and 60. Bam, here it hit 61, drops down to 52, pumps up to 58, drops down to 55, consolidates. We had a triangulation period here, and it pushed up and tested the 65 before everybody was like, that's too high. I'm selling out. And I think all this is all retail money. And then here institutions bought it. So it came down to 46. Institutions pushed it back up. Crap, I just moved that chart. To 60. And then more retail investors, they saw this downward trend and they're just getting out of it. They exited their position. But so is there more retail money that bought in back here that's still saying, you know what? I'm going to hold this money. Well, here's what a lot of people are saying. You can see in Bitcoin on the blockchain that the wallets that are holding these basically haven't sold any. So it is consolidating. And my prediction is when this breakout, I used to think it was going to break down. I think if it does break down, it will hit 30. I don't think it's going to go past 28. Maybe down to here, maybe 25, but it is not going to go past 25 on this move. It will ping back up and cross through and test 40. And then I think that's our channel. And then it'll stabilize again in around this 30, 35 range. And then eventually I think it'll go down and it'll repeat this process and it'll test 20 as a final low. And then at that point, I think it'll push back up and maybe break 60. And then they said when it breaks 60, it's probably not going to come back down. That's what everybody's saying. It's probably going to find a new bottom here, and that might happen probably in 2022. But some people think it's going to happen before the end of the year. But I can tell you, I do think it's going to test 20 before it establishes 60 as its new foundation. So that is my analysis. As far as I hope this helped you, but just to clear this up, this right here, I'm on a daily chart, and you can see there's only a couple more moves. This is the day we're on. And this is a pin candle, which means there's a lot of indecision. And this is forming a pin. So, I mean, this is a pin. This is a pin. And this is a little bit optimistic of a candle right here because it's weighted at the top. But these are both middle weighted. And I think we're going to have a breakout here in the next couple days. And I think if it pumps, I think don't think it's going to go to 60. I would think it's going to test maybe 50 and then it'll push back down to where it is. And if it does that, then it'll probably establish this as a new low. And it's going to show us what its new trading channel is basically. But right now it's showing us this is the middle of the trading channel. And that's why I think that the bottom of the trading channel will be around this mark here, which is around 30 and 50. And I think it's just going to ping pong around in there. And if you're a day trader, you'll have opportunity to make money within that range. I mean, that's still good 20-25% range that you can make on your money. But that's it for me. Thanks for watching. I am going to check out now and say goodnight to everybody. And thanks for watching, whoever is watching. See you in the next one.